Every time the US government shuts down, something strange happens in the market. Things stay a bit calm at first, but when the government reopens, boom, the market reacts hard. Sometimes it just dips a little, and sometimes it crashes crazy. And right now, this shutdown with the US government has been the longest for a very long period of time. It has actually lasted way too long. So let's talk about why that matters, what could happen next, and why you need to be paying attention, especially if you're invested in crypto. So when people hear government shutdown, it really sounds a lot dramatic, almost like the government has shut down completely. But here's what actually happens. The Congress cannot agree on a budget. So because of this, they literally stop paying for certain things. Federal offices close, workers go home, paychecks get paused. Imagine running a company and suddenly half of your employees stop showing up because there's no longer money in the company. Things begin to come a bit slow, right? Well, that's basically what's happening with the US government right now. And here's the crazy part that most people miss as well. During this period, there's no data that is being recorded, mostly because nobody's working. So no new reports on inflation, no job numbers, no economic data. It's almost like driving a car with your eyes completely closed. Although you're still moving, but you can't see where you're going. I don't know if that makes sense. Investors, big banks, and even retail traders really depend on data to know exactly what the market is doing, or at least to make price projections. When that information stops, the market goes quiet. Not because everything is okay, but because nobody really knows what is going on. The market is in a place of standstill right now. It's frozen and everybody's waiting for new information. Now, when the government opens, all of that delayed data hits the market at once. It's like an influx of all the missed messages that have been piling up waiting for you. Inflation, debt, job losses, all of this information dropped at the very same time. And if that data turns out to be bad or not so great, the market reacts instantly. Like, it reacts bearish instantly. Now, this isn't the first time something like this has happened. That's why I'm saying this. I'm basically talking based off of what has happened in the past. In 2013, the US shutdown lasted for about 16 days. The market looked fairly okay during the shutdown, but once data started coming out again, fear kicked in and stocks dropped crazy. In 2018, it's the same story. After the shutdown ends, people get the real data and then boom, market crash. So evidently, history is showing a very clear data here. You know how they say history does not repeat itself, but most times it often rhymes. The shutdown doesn't necessarily hurt the market. It is the reopening that actually causes the chaos. Why? Because finally, reality hits. Investors begin to realize that maybe things weren't looking as great as they thought. This shutdown has been dragging longer than usual. So how does this correlate directly to where we are in the market cycles, especially when it comes to crypto? Now, many of you know that in my opinion, I believe that the top of the cycle is probably in, and I'm looking at maybe 126k was the top. Now, I'm not saying this off the top of my head. It is literally based off of history. Remember what I said? History does not repeat itself, but most times it often rhymes. So if this shutdown that has lasted way longer than it should, and typically from history, every shutdown has almost led to a crash or a mini crash at the very least. The market has already plummeted significantly. Imagine what's going to happen when the government reopens. I think it's going to cause a trigger in the market. Of course, I'm not a financial advisor, so I can't tell you exactly what's going to happen. But that's just what I think. The smart players in this trading business are not just waiting, they are also preparing themselves. Hedge funds are quietly moving their funds into safer assets. Assets like cash, bonds, and even gold as well. They are cutting their risky positions and waiting for cheaper prices, which is something that I always like to tell everybody that watches my videos. You don't want to buy at premium prices when prices are literally at new all-time highs. You want to wait for the discount. The secret to winning in this game is to buy cheap and sell expensive. Not buy expensive and then sell cheap. It doesn't make any sense that way. And big investors know how to play this game because they've seen it happen over and over and over again. They have the experience, they have the money, so best believe they are going to execute with precision and the market will be shocked by what happens. So while everybody is just scrolling past headlines thinking that it's just politics that is going on, the market is literally holding its breath. The longer this shutdown lasts, the more pressure builds and the more catastrophic it can be. Whether the end of the shutdown means a dip or a full-on crash, it really depends on what data comes out at the end of the shutdown. Either way, don't be caught 2 steps behind. Be smart. If you've enjoyed this video, make sure you smash the like button, subscribe, share, and do all of that nice stuff. I'll see you in the next video. Bye.